Ladies and gentlemen, today we're diving into the EU new tariffs on Chinese EVs and why this might actually be bullish for NIO. Stick around to find out why. So guys, today we're diving into a topic that's stirring the automotive world: the European Union newly approved tariffs on Chinese electric vehicles EVs. But here's the catch: this development might actually be bullish for NIO. Let's get started. First, let's quickly address some positive news circulating around NIO and the broader Chinese EV market. According to reports from Global China EV, there are approximately 100,000 Onvo orders locked in. Now, whether that figure is spot on or a rough estimate, it's still significant. We know that orders have far exceeded expectations, almost 3 times the original forecasts. Of the pre-orders received, around 35% to 40% have already turned into locked-in orders, which is huge. There's no denying the strong demand for Onvo vehicles. In fact, some buyers are facing up to a 16-week wait for their new cars. The bottleneck? Production. Right now, the challenge is for production capacity to catch up with that surging demand. And speaking of production, Onvo themselves recently shared some interesting details on their official app. Apparently, before their launch event on September 20th, only about 2,000 vehicles had been manufactured. Half of those cars were used for showrooms and test drives, while the other half were pre-built for early deliveries. That aligns with the September delivery numbers, where about 800 cars were delivered. But looking ahead, Onvo is expecting a significant ramp-up in production. According to Xinhua, the head of Onvo Customer Experience, the company faced some delays in scaling production due to the use of newer technology and materials, like the A8295P chip. Onvo has been stockpiling these components and is working hard to resolve supply chain issues. They've already made several improvements, and it looks like production is about to speed up. What's more exciting is that Xinhua confidently predicted that October would see over 5,000 vehicles produced, with that figure climbing to over 10,000 by December. If this plays out as expected, we could see around 5,000 Onvo deliveries in October, which is a solid figure. Combine that with NIO numbers, and we're looking at potential record-breaking deliveries around 25,000 vehicles per month, which is undeniably bullish for NIO. Now, let's get to the big topic of the day: the EU decision to approve tariffs on Chinese-made EVs, which could go as high as 45%. Understandably, some critics, or bears, are quick to shout that this spells doom for companies like NIO. But hold on a second. Before we jump to conclusions, let's take a closer look. First off, have you ever wondered why Germany, one of the EU's largest economies, is actually opposing these tariffs? Well, here's the answer. German car manufacturers like BMW, Mercedes-Benz, and Audi sell far more vehicles in China than they do in their home country or even across Europe. In fact, China is a massive market for them, much bigger than the European market. So, the German auto industry is understandably concerned that if China retaliates with its own tariffs or import taxes, their cars will become significantly more expensive in China, hurting their sales. Just a few days ago, there were rumors that the EU and China had reached an agreement not to impose tariffs and instead settle on a minimum price for vehicles. Clearly, that didn't pan out, and now the tariffs are officially approved. But here's the key point. NIO doesn't sell a massive volume of vehicles in Europe. Sure, they're present, and yes, the tariffs might make NIO cars a little pricier in Europe, but their European sales are relatively small. Most of NIO sales are in China, and that's where the bulk of their deliveries take place. Now, think about this: if China responds to the EU tariffs with higher import taxes on German cars, those BMW, Mercedes-Benzes, and Audis are going to become a lot more expensive for Chinese consumers. Let's say, for instance, a customer in China is looking at buying a BMW 3 Series. Right now, that car might cost around 300,000 RMB. But if a 20% tariff is slapped on it, the price suddenly jumps to 360,000 RMB. Meanwhile, NIO cars stay at the same price. This pricing gap could push more Chinese consumers to choose a NIO over a German luxury car. There's already a significant shift happening. Around 70% of NIO owners previously drove cars from brands like BMW, Mercedes-Benz, or Audi. And with these new tariffs, it's likely we'll see even more German car owners in China switching to NIO, as the price difference becomes harder to ignore. Sure, NIO will feel some impact from the tariffs on their European sales, but let's keep things in perspective. NIO European operations include a subscription model, allowing customers to rent vehicles instead of purchasing them outright. While the tariffs may raise NIO prices in Europe a little, the effect is marginal compared to the overall business, which is heavily centered in China. At the end of the day, the real loser in this tariff war is Germany. Their automakers stand to lose a lot if China retaliates with import taxes, making their cars less competitive in China market. This is exactly why Germany is opposed to these tariffs. They know the potential fallout. So, even though it might look like bad news for Chinese automakers like NIO at first glance, in the long run, this could actually be a win for NIO in China. As more German cars become less affordable due to these retaliatory tariffs, more customers are likely to consider NIO as an attractive alternative. And NIO is ready for this shift. They've already launched trade-in programs specifically aimed at BMW, Benz, Audi customers. If you're driving a 1 or 2-year-old BMW 3 Series, for example, you can trade it in for a brand new NIO, making the transition easy and hassle-free. So, while the EU tariffs might seem like a setback on the surface, they actually present a golden opportunity for NIO. In the long run, NIO stands to gain more customers, especially in China, where most of their sales are concentrated. And don't forget NIO customer service, the NIO House community, and all the perks that come with owning a NIO are already viewed as superior to what traditional German automakers offer. In conclusion, while the news might seem grim for some, for NIO, it's a reason to be optimistic. These tariffs could end up boosting their market share in China and cementing their position as a top EV brand. So ignore the noise from the bears. This is bullish for NIO, and it's a trend that's only going to grow stronger over time. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.